Hey, everybody, welcome to this episode of The Complete Advisor. So glad you're here. I want to remind you, of course, don't forget you can click that like button, subscribe, leave some comments. I would love to hear what you have to say. And in fact, today's episode comes from an email that I received. And we're going to talk about 5 things clients don't get right about taxes from an advisor's perspective. And joining me today, Glen Wantje out of Pennsylvania. Glenn, awesome to have you here, sir.
Thanks so much, Dennis.
Now, you work, of course, with clients. You've had discussions on taxation, I would imagine.
Always.
Okay, so I'm so curious. I'm going to feed these to you. So for those of you watching the episode, which, yes, it is a podcast, but you can watch us on YouTube. You can watch us on Spotify. You can watch us on Apple. Anywhere else you check us out, of course, that's audio. But so Glenn has not seen these, so I'm going to fire these at you because I'm really curious. 5 things clients don't get right about taxes. I want to hear your experience. So in your practice, though, you do work with some with pre-retirees.
The pre-retirees and retirees both, yes.
Okay, perfect. First one that clients don't get right. Clients think getting a tax refund is a good thing. Agree or disagree? Have you run into this?
I totally disagree, and I run into it all the time. I think it stems from when we all were younger and we got our first tax refunds after working a job, and it was a couple $100 and it was easy. We didn't have a family, and you could run out and say, I'm buying a TV with this, or I'm grabbing a radio or a set of speakers, or putting some tires on my truck. Whatever it may be, it was fun to get. Well, all of a sudden now it comes and you're, starting a family, you're working, you have steady employment, and to have too much money withhold is just giving the IRS free money.
Yeah,
they're holding on to your money for a year before they give it back.
Now, have you ever gotten anybody? I've always tried, or maybe it's a dream that I have for myself. I'd like to be even Steven when I do my taxes, but I have yet to ever achieve that. To where wouldn't it be? I don't know if you've ever done that, but like to be like, okay,
yeah,
we're even.
Would be nice, but doesn't. I mean, you can be close, but it's like the price of right on the final guess. Every once in a while, I'm sure someone gets it 100% right, but it's few and far between.
That is exactly right. Whoever it was, some nameless bureaucrat, whoever said, hey, you know what, let's do withholding from everybody's paycheck instead of the one at the end of the year. I think it was like in the 40s or something. An evil genius. But okay, next one. Clients don't get how tax brackets work. Agree or disagree?
I totally agree. I think a lot of times, just like we were going back with the withholdings, tax brackets aren't the same for everybody. Yep. And whether you're single, you're married, how you file, and how it's aggregated, people sometimes just think, a lot of times I'll have clients come to me and say, well, I can't make too much money because that'll put me in a higher tax bracket. Yeah. Well, not necessarily. Because that's not how our tax brackets work. You just make $1 more, it doesn't mean that your taxes go up by 35%.
Yeah, so few people understand the progressive tax system. With that being said, are you doing in your practice? How often is Roth conversions coming up right now?
They're pretty popular. They're especially popular over the last couple of years when the market was down and we were able to hedge some of that, converting some money. And as now the market's hopefully starting to pick back up and interest rates have gone higher, we're able to make some of that money back up 100% tax free.
Do you think it's been easier lately with presenting the idea? I know that originally, when a person would present the idea of let's convert some of that money. Okay, everything sounds great until it's like, well, but you're going to have to pay some taxes and then it was like, I don't know that I want to do it. Any change in attitude from the advisor's perspective as you're out there in the field with people looking at how much? I mean. No politics, but there's a lot of stuff that's got to get paid for. And so that money's going to come from somewhere.
Right.
Do you think that resonates more now? Are people more interested in that conversation?
I definitely think so. I think a situation arises there that people know things aren't for free. Yeah. And you look at it and say, okay, 10, 20 years down the road, if I need to make a withdrawal, I'd certainly like to put myself, in a tax diversification to where I can have some of my funds taxable and some tax-free.
We did I did a podcast with our friends from Stonewood, and they're putting out that idea that we should be looking at mitigating tax risk the same way that we look at mitigating all the others. But they present it in a way that I just find fascinating. Okay, next one that was in this article. Clients don't understand taxes in retirement, especially as it comes to Social Security. Agree or disagree?
I agree. Sorry.
No worries.
Both Social Security and Medicare taxes, people just don't get. And the reason why I feel is you don't really look at them too much until you're almost ready to retire. Then it's like, okay, well, what am I paying into, or what am I able to do? But when you're younger and you're just working, a lot of times people don't know what the FICA tax is, or
I
how
thought
much.
You were going to totally say something different.
And or how much money is being withheld from Medicare when I'm 32 years old or 30 years old.
Yeah.
So I think the education needs to be more, to the employee when they're younger, so they understand what those taxes are going for.
There's a lot of things that we just maybe we should go all the way. Of course, kids need to be able to read and do some math. That would be a good thing too. But more finance classes to understand the things that they're paying for. And I thought I read somewhere, I don't know if there's maybe it's a state out west where if you get to a certain, maybe I'm making this up. Once you get to a certain age, you're free from state income tax, but I think you have to be like 95 or 100, which that seems kind of fair.
Right. Well, it's still too. I know in Pennsylvania, the school district tax is one of the biggest ones for my clients, and it's always hard that I'll have clients that will retire and the kids are out of school and they're in different states, but they're still paying for the new football field at the school. So
I always think, because I look at mine and I always think it's ridiculous because our our girls are up and gone and out and stuff. But I think that if you don't have to pay those taxes, then you can't gripe about kids these days.
That's true.
That's true. Okay, here's one. Your experience with this one. Clients think tax planning is the job of the accountant.
Yeah, that's a common theme that a lot of people will bring up. And we'll be in a presentation and we'll illustrate some good tax savings for our prospect or our client. And a lot of times they'll say, well, why didn't my CPA or accountant tell me this? Yeah. And ours is because that's not their job. Now we do work with some CPAs that we have a great partnership with, that we work together for the client's best interest. Yep. But that's not for everyone. Some people will take it to the H&R Block or the account that they've been using for 30 years, and that's just they're just filling out forms and sending it in.
The way I always thought about it is CPAs and accountants, they're like historians. They're documenting what happened in the past and making sure it's documented correctly. And advisors are forward-looking, working on making the best choices to maximize your income and not pay more taxes. You ever run into situations, though, where you have to dance that line of somebody says, why did my guy tell me this? And you have to half defend but not...
Absolutely, and sometimes there's a lot of great accountants and CPAs, but on the same hand, sometimes just like in our financial services, sometimes people don't know. They don't know what they don't know. Yep. So we take it with our clients to say, if we need to have a meeting with you and your accountant, let's do it together. Let's set up a joint meeting so we can help explain what we're trying to do and make sure that they understand what we're trying to do. Because the feedback that we get back is we have a presentation, a client goes through, they decide to do our proposal. What we never want to hear is, well, my accountant said I shouldn't have done that. Or why did you do that this year? Because we don't want to break that relationship. We want to use that relationship for the benefit of the client, that all their advisors are on the same page.
Do you have any referrals out of CPAs and accountants?
At times, but I think we've given a lot more than we've received.
Yeah, I remember in practice it was, cultivate a relationship with the CPAs, and it always seemed kind of like I'm buying them cookies every spring and sending clients, and then we would never see anything.
Yeah, ours. My view on that is I've gotten a lot of referrals, but I've gotten a lot of referrals that were a lot of work. Yeah. In a situation to where it was we give them some low hanging fruit and it's sort of like, I have myself a big issue with this particular client. Here, Glenn, I'm going to refer them to you so you could fix the problem. And it's one of those like, okay, well, thanks Thank you very much.
Thanks for the extra work. That's
Right.
great. Yeah.
Yeah.
Okay, last one here. Clients don't keep up with changing tax rules. You think that's true or false?
Their client tax rules, it would be a situation where clients know about them, in my opinion, but they don't know any idea what they actually are or how it affects
headline
them.
level.
Headline level. Oh, I know they're changing the required minimum distribution rules for IRAs, but I have no idea what that means and how it affects me. Or they're changing rules on, the amount that you can contribute to a Roth IRA, but I have no idea how much that is. So I think they understand, and people are taking a more proactive stance on trying to keep themselves aware of the tax changes, but they just don't know what they are.
Yeah.
But they just don't know the meat and potatoes of what's actually changing.
It's funny as you said that I have this bad habit with my wife where I'll tell her about a headline, and I'd be like, the shop down in the corner burnt down. Did you see that? And she'll be like, well, tell me some details. Like, I didn't read the article.
Right. Yeah, that's the disadvantage of social media and scrolling too fast to where you see certain things, but you don't feel like finishing the article.
Yeah. Like, oh my gosh, that's terrible. What's next?
Right.
The NFL drafts happen.
Right.
All right, so Glenn, thank you for being on this episode.
Thank you again.
For everybody else, this is an article that came from Think Advisor. I'll put a link to the article in the comments so that you can check it out, because actually the article has 13 things, but I only want to talk about 5 because our attention span's just getting shorter these days. For everybody else, though, don't forget you can subscribe. We'd love it if you do that. Send your comments. I'd love to hear what you have to think, what you have to say, suggestions. Feel free to rate and review us out there on some of the different podcast venues. So that being said, Glenn, thanks for being here, friend.
Thanks so much.
This podcast is for financial professional use only and not for use with the general public. The information provided is the exclusive property of Creative One and is protected by copyright and other intellectual property laws of the United States. This material has been prepared for informational and educational purposes only. It is not intended to provide, and should not be relied upon for, accounting, legal, tax or investment advice. Creative One is not responsible for the results of programs discussed on this podcast or any liability stemming from the use of it. Although we may promote or recommend the services offered by this company, agents are ultimately responsible for the use of any materials or services and agree to comply with the compliance requirements of their broker-dealer and registered investment advisor, if applicable, and the insurance carriers they represent. Copyright 2022, Creative One Marketing Corporation.